VentureLabs and Venture Connection Granted webinar looking at support for startups through the COVID crisis. We've got a number of different people who will be with us today as presenters, but I think what we'll do is we'll just wait a little while for more people to join us online. It's exactly 10:30, so we'll wait a few minutes to get going. I'll just give you a sneak preview of what the agenda is today really quickly. We're going to start off with just a few introductions. Then Stephanie Sang is our guest presenter today, and she's with Granted, the CEO, and she'll go through a number of different scenarios and explain a lot of the programs that are available through government. Then we'll have Q&A afterwards. In the Q&A, Floyd Simons, who's another one of the mentors at VentureLabs, and myself will ask a few standard questions, but obviously there will be Q&A questions from the audience as well. We will have a couple of polls through the presentation. We're just asking for a bit of an audience feedback. And when we do that, we'll pause just for a little while to give everybody a chance to answer the poll questions. So I'm just turning on my camera so you can see everybody who's going to be online today. And I wondered if Floyd could do the same with his. There we are. Thank you. And we'll go to cameras mode so that you get a better view of all three of us. And then we have a chat function. If you have any questions during the presentation, or if there's something that you'd like a bit of clarification on, please feel free to send us a chat message. We'll use a separate Q&A for the questions at the end of the presentation. It sort of allows us to separate things out. So we're going to just pause for another couple of minutes before we get going. But if there are any questions about the process or the agenda, and I will repeat that again, please send us a quick chat message right now. And then we'll get going with some of the other pieces in a little bit.
So Dave, I was just saying to you yesterday that we'll probably be focusing on kind of more the federal programs. But
yes,
definitely there are some provincial programs that the attendees should be aware of. So I'll make sure that I kind of list through those ones. But just before we got on, I mentioned that I applied yesterday for the BC Hydro grant. And so for those who, are paying their own electricity, it's not through your landlord necessarily. That's a super easy one to get started on to get a few $100 in your pocket or at least credited towards your bill. So make sure you guys do leverage that. It's not a government grant, in that way, but it's another type of support that's available.
Right. Yeah, I think one of the things that we sort of notice in the programs that are available is that the federal government has more programs for businesses, and many of the programs at the provincial level are focused on individuals.
Yes.
I mean, there is a little bit of overlap, and there's times when they are both supporting you, which is great. But as Stephanie said, we'll focus mostly on the business ones, but acknowledge some of the individual programs that are out there.
Mm-hmm.
Okay, so if Stephanie, you want to go back to the slide view, I think we're about 3 minutes in now. I'm just going to reintroduce, for those who have just joined us in the last few minutes, what our process will be and what we're going to do in terms of the agenda. So I'm going to disappear now, so Stephanie's going to be the only presenter as we get going. Floyd is doing the same thing. We have 3 people who will be online a great deal today. There's myself, I'm Dave Thomas. I'm a mentor in residence at VentureLabs and Venture Connection. Also, Floyd Simons is another one of the mentors at VentureLabs. He's online for questions. But our key speaker today is Stephanie Sang. And Stephanie is the CEO of Granted. And she's got about an 18-slide presentation where she'll go through a lot of the programs that are available. And she'll get into a fair bit of detail about how they work. And at the end, she'll also move into a few scenarios, which she says, how does it fit this type of company? How does it fit that type of company? So we'll do that as the presentation rolls along in the second half. During the actual presentation itself, we'll send 2 polls to the audience just to get a bit more information about what is really of interest to you and what the things are that are priorities for you and your company. We'll have a slight pause when we do the poll to give you a little bit of time to complete them. Obviously, they're optional. You don't have to answer them if you would prefer not to. We will have Q&A throughout, so please use the chat function if there's a question of clarification. We'll have a more formal Q&A at the end with questions from the audience, and they'll be augmented by a few questions from Floyd and myself as we go through the presentation and perhaps look at the scenarios. We will record this so that it's available to people to look at again later on, and it's available as a resource. I think Stephanie will reiterate this, but one of the things we know very clearly is that this is as of May 1st, and a lot of these things change pretty regularly. So if you're viewing it in July, don't be surprised if things have evolved a little bit between now and then. So I'd like to ask Stephanie to take over as the presenter and to give us a bit of a rundown of all of the different startups and programs for startups through the COVID crisis. Thank you very much.
All right, thanks, Dave, and Floyd, and the SFU VentureLabs team. I'm, again, Stephanie Sang, CEO of Granted Consulting. So today is going to be a fun presentation. I encourage you to use the chat function to make sure you get your questions answered. So without further ado, we'll get started. The disclaimer. Dave had mentioned this just a few minutes ago. The information that we have on the slides are as of now, and we do have consolidated information. I believe VentureLabs also has a page on COVID-19 resources. We have our own at Granted, and so that's available where we will constantly be updating things. What I like about what we've done on our page is we highlight based on the most recent changes. So you'll see those in color. And I think that's really helpful for people who may have looked at the page, a week ago, and they're coming back and they want to be able to beeline what has changed. The other thing is that I am not the government, although we work really closely with various programs. And so the information that I'm sharing is not the perspective of the government. So just to be clear about that. Just one sec here. Oh, there we go. Okay. So a little bit about Granted Consulting for those who don't know who we are. We are a consulting firm in Vancouver. We've got 8 staff that help businesses of a variety of different industries with grant programs in Canada. And so we primarily work in Western Canada from here to Manitoba on hiring, training, and market expansion programs, which means that things like SHRED and IRAP are not our core, but anything that's kind of in this realm of either hiring people, upskilling your staff, and or expanding into new markets, or engaging in collaborative in innovation, things like that could qualify under kind of what it is that we do. The last 6 weeks and probably onwards has been really focused on COVID resources and strategic resource plans for clients, as well as for companies who are like, hey, I know that there's this COVID stuff. I hear this and I hear that about it, but can I just go to one source and understand everything? So we've been really trying to serve the business community in the last 6 weeks, ensuring that companies know what they qualify for and what their plan should be moving forward. We also have the information in our own app. We developed Get Granted last year that matches government grants to businesses. So you guys could take a look at that. And of course, there's a free list of grants that your company can take a look at afterwards. And obviously the paid model would be more details about that program, including best practices and the summaries. So this is a visual view of the different types of programs that have launched. It's by no means an exhaustive view. So I've selected the programs that I felt were most relevant to organizations that are within VentureLabs and Venture Connection. So I'm going to go through these really briefly. I know a lot of people are like, oh, I know this grant and I know this program. And so that's fine. I'm happy that everyone is keeping up with the news and information about what's available. But I will go through this because some of these details on these programs have also changed. So the 10% wage subsidy was one of the first programs that rolled out. it does exactly what we're talking about. It offsets wages that are paid from March the 18th onwards for the time of 3 months. And what it actually does offset, though, is not total wages. It offsets the income tax component of what you would be deducting in your payroll remittance. So that is one that is available. And regardless of whether or not you want to leverage it or not, you actually have to, because the next program of 75% wage subsidy, which some of you may qualify for, others will not, requires that you deduct that 10%. So we'll go through a little bit of those details in a minute, just some best practices around that as well. Tax deferrals, this is not necessarily free money. It is deferring taxes that you may owe. But it is important that if you want to keep more cash in your business bank account, that you look at this. The work sharing program, it is a savings where if, let's say, for example, you have a couple of staff members and they're willing to engage in a work sharing program. So again, it's an opt-in program for the staff where they might say, hey, I'm willing to go down to 2 days a week. And person B says, yes, I'm willing to do the same. And we're in the same department. Then the 3 days a week that they aren't working, if they qualify for EI, they can tap into this for EI benefits for those 3 days. And then the CURB or the CERB, depending on how you pronounce that acronym, the $2,000 a month, the primary change on that one is $1,000 of income is allowed now. So just make sure you keep this in mind because that has evolved since it was launched about a month and a half ago. The commercial rent support, I will have a couple of slides on this. It may or may not be applicable depending if you have commercial rent that you need to be paying for, but it's good to know. And then, of course, on the financing side, and just touching on some of these acronyms and details, the IRAP program, which the IAP program, I should say, has expired as of the 29th. So just a couple of days ago, if you did not get your application in, and I think there's a lot of VentureLabs and Venture Connection companies that would have qualified for this. The requirement on this program is that you did not qualify for the CEWS 75% wage subsidy. And so, unfortunately, we don't see this one popping back up. It was honestly quite a small budget compared to some of the other programs. So we'll see what happens and what gets approved through that one. And then, the rest of the programs are really EDC loans. I think a couple that I'll bring up that are more relevant, the SEBA program. This is offered through your banks. It's a $40,000 loan at 0% interest, so long as you've had payroll between 20,000 and 1.5 million in 2019 or over the last 12 months. And so that one is money in the bank, 0% interest until the end of 2022, which is a great deal. Make sure you guys get that. Super easy process. And so that will give you some bridge financing there. And then the other one I'm going to bring up is the BDC Capital Bridge Program, which some of you may have heard of through BetaKit or some of the news releases on it. It's a little bit of a hidden program, honestly. Like there's not very much on the government end that they're speaking of, but it allows companies that have raised at least $500,000 pre-COVID, so before March the 15th, to be able to access BDC funding as a convertible note for future raises. So that's something that if you guys are in fundraising, I would definitely keep your eyeball out for that. Dave, you've got a poll that you would like to share with everyone. So we're going to go ahead and give you guys a few seconds. Please give us feedback on this because it's helpful for me to just ensure that we cover your needs during this call.
I just sent it out to everybody, so they should be receiving it. It's interesting. You can see the responses as they come in. So we'll just wait another 5 or 10 seconds, and then I'll move on to the next slide.
So with these various programs, again, with the rule changes, just to be aware that what may exist now may be quite different from what would exist later. And also the rules and regulations around them, they are shifting. And I think that the one interesting thing is that the government is pretty agile at this time to be able to address the needs. of comments and questions that are coming through and how things are being rolled out. So they are very active in listening and respond to into these things. Dave,
So
are we good with that?
just as a summary, we've have people indicating interest in all 5 of the options. The 2 that have the most scores are CEWS and SERB. So those are the 2 which just seem to resonate with people the most. That's great. Let's move on.
Yeah, let's do that. So this will give you a little bit of information in terms of the COVID cash benefits and timing of it. The CEWS, I'm going to start with that. And, you guys will have these slides, so feel free to use them as you need. Just to note that the CEWS is a 12-week program. It can be backdated to March the 15th. So some of the questions that have come up is, how can we ensure, because there is a requirement for this 75% wage subsidy, that we can access it for those who we've already laid off for a month? So I'll go through a couple of details in a slide later on about that. Again, if you look at the TEWS, you'll see that there's a weird overlapping period or lack of overlapping period, I should say, of 3 days. And the other challenge with this program is, the deductions are done on a monthly basis to CRA. And so you have to be careful about the calculations to ensure that you are only calculating not the full month of deductions that you are eligible for your remittance, but you are looking at just the portion that they're willing to pay for. So for March, for instance, your remittance would only count from March the 18th to the 31st. The work sharing program, this program has always existed. I'm not even going to say that it's a COVID program, other than to say that it has been extended for up to 76 weeks, which is unusual. It's usually maxed at 38 weeks for most companies. And the way that it works is it offsets with EI, but unfortunately there is no play between work sharing and the CERB. So just kind of keep that in mind. You can't kind of double dip into those 2. The CERB or the CERB program, $500 a week. Mentioned this earlier, that it is possible to give your staff $1,000 in income for the month. And of course, we're speaking, of a calendar month, but technically you should be looking at it's every 4 weeks that the CERB is issued. So you need to make sure that compliance is kind of within that pay period as well. And then the rental assistance, which we have a couple slides on. Sounds like it might not be top priority, because obviously some of you guys are working from home or through VentureLabs. So I will touch on this, but I'm not going to spend too much time on it. Make sure we spend the time on other stuff. Okay. One thing, actually, let me go back here for a sec. One thing to note is the CERB program, it is possible to be on and off on it. So what that means is you might have laid a couple of people off for March the 15th, and I guess into April the 11th is the first term. And then you brought them back on because there's this program for the CEWS. And then after 2 or 3 months, you're like, you know what, we can't do it. We're going to have to put you guys back on the CERB program. That's okay, because as you can see, there is funding availability all the way through to October the 3rd. And so the odd thing about this is when I was putting up this slide, I went back to the CERB program site, and the way that they broke out the 4 weeks, it went only up to like the end of September. So I'm not sure why there's an overlapping 1 week period here. They probably will explain it a little bit later on. But it is possible that you can kind of take a look at what your needs are and go backwards, or go forwards and say, I'm going to take a break for the CERB for these 2 months and then go back on it later on. So just something for you guys to be aware of. There's some flexibility there. Okay, so the CEWS program, some greater details on this. Companies must have a payroll account by March 15th. So what they were trying to avoid were companies that were like, oh, well, we weren't paying ourselves. Let's say, for example, sole proprietors that are on the call, we weren't paying ourselves. We were just doing sweat equity, or maybe we were just taking dividends or whatever it is. I'm just going to open up a payroll account and start paying myself. So CRA is very smart. They're like, nope, can't do that. So you need to have had a payroll account by that date in order to qualify. But look at the different types of businesses. Like, there is a variety here. So sole props qualify, including trusts if you have that structure, corporations, I don't know if there's any nonprofits or charities, but even if you're working with some, they of course qualify as well. And then this partnership of eligible employers, I threw it on there because it's on the eligibility criteria. I don't really understand what that means, but let's just throw it up there anyway to make sure you know this. We do need to ensure that you qualify by way of drop of revenues. So there's two different ways that they're looking at it for the month of March. And I think that those who are applying right now, this is kind of more pertinent, but later on, they're going to ask for a bigger drop. So that's why there's a caveat in yellow down there. So more than 15% if you compare this year versus last year. If you are an early stage startup, maybe you don't have any revenues from last year yet, but you do have some revenues as of January and February. So what you do is you take your revenues average for January and February. Don't just take January, don't just take February, average it out. And then you compare it with your March or April or May. And so some companies are going to have a choice in terms of how they're going to do this comparison, meaning they could choose March, April, May of 2019 versus March, April, May of 2020, and or look at Jan, Feb, and that drop. So if you look at last year, you might not qualify. Maybe last year your revenues were low, but then you look at this year, you do. So it depends on whether or not you were set up by that time and generating revenues. The other thing that to note is that you can choose, and I have re-verified this with CRA. I was on a call with them. The call was recorded. They didn't send me the recording, but they were really clear, and I've asked them to make sure that it's really clear on the FAQ section that you can choose if you want to use your cash or accrual method of accounting. I am not an accountant. You need to speak to your accountant or someone who knows more accounting in terms of what is the right way of doing this for your company. But regardless of how you choose your time frame of revenue comparison or your calculation method, you have to be consistent for all 3 months of claim that you're using the same method and the same time frame of comparison. So don't say, oh, I'm going to compare March 2019 with March 2020 for the month of March, but then April, I don't qualify. So I'm going to compare January and February average revenues with April. That's not going to work. Nor should you say, okay, I'm going to use the cash method for January for comparison of March and April, and then in May I'm going to go to the accrual method because I no longer qualify. Don't do stuff like that. They will make sure that it would report it in one way or another based on the current application process. They don't ask for any details on how you calculate it, but would there be potential audit in the future? My guess is yes. Okay. So let's look at a comparison here because I like tables, as you can see, and I like real life data. So if you are a company and you're calculating it based on cash, you are going to see that this company made 20,000 in Jan, 40,000 in Feb, which averages at 30,000. So what I did is I put in some numbers. You can see that they were making 25K in March, 30 in April, and 18 in May. The change is that it was 16%, 0%, and 66% for those ones. And you'll see that in the accrual method, the change is obviously different as well in the way that it's done in the accrual method. So the challenge here is going to be, are you eligible? So I want you guys to look at the bottom half of this chart now. So under the cash revenues, the comparison of the 16%, because the requirement for the month of March is only 15% drop or more, they do qualify for the month of March, okay? But then look at the month of April, they didn't drop. They were at 30,000, no issue. And so there's no issue there. But then why do they qualify? And it's because that they qualified in March, so they actually roll you into April. And so now we look at May as an independent month. And so the company dropped 66%. So yes, there is a drop of more than 30%, because remember in April to May, they're looking at a drop of more than 30%. So they qualify for, so for this cash method, they qualify for all 3 periods. Now look at the accrual method. So 18,000 versus 22,500. There is a drop, yes. And then because they met March, they qualify for April. That's correct. But then you're seeing a drop of only 11% for the month of May, and so they don't qualify. So just because you qualified for the month of March and it rolls into April, because in the month of April you didn't hit 30% or more drop, you almost just carried over from March, but you don't then carry over into May. So that's really important as you understand the terms on this particular slide, because it is crucial to ensuring that you are doing it correctly. Okay. I'll take questions after this slide on the CWS. So for the staff eligibility, the requirement is simple. If you are owners and or staff on wages or on salary, so what does that mean? That means that you guys are paying taxes. There's CPP, EI being deducted and or taxes being deducted from your paycheck on a biweekly or semi-monthly basis, or even monthly if that's how you are remunerated. So that needs to happen. Now, if you were paying yourself for, let's say, the entire year of 2019 at the end of the year, which I've heard is an example, you technically do qualify for it, but then we're going to have some issues in terms of, do you have any income from January to March the 15th? Because what they will look at is you cannot just bump your pay up right now, because they will give you 75% on the dollar, especially if you guys are owners. So we've had this question before. It's like, hey, I wasn't paying myself. Now I want to pay myself. How can I do it so I'm eligible? And it's actually, honestly, a little bit too late to put yourself on payroll now, because if you are the owner of the company or immediate family members of the owner, then you will, or shareholders of the company, I should also say, then they will look at your revenues, or your income rather, from January to March. And so you can't really cheat the system in that way. It's really clear how that calculation is done. They take the average pre-COVID and ensure that that's the max that you can kind of claim moving forward. Now, is it different for staff who, let's say, for example, you laid off 3 staff. So you were originally paying people fine until March the 15th, then you laid some people off and you had to then bump up the hours for other staff. Maybe they're only working 30 hours and now you're asking them to work 40 hours to offset some of the other employees that were laid off. That's fine. They will do that calculation because they are not related to you and they are not shareholders of the company. So they don't have a benefit in that way. They will look at that and they'll calculate the 75% to the maximum of $847 a week. So that's something to be aware of. The other thing to be aware of is your remuneration of commissions and taxable benefits. It can also be calculated as a part of payroll. But the details on this, and the confusing part, is it based on commissions that are earned and not commissions that are paid. So when you have staff who are working January and February for you, and maybe those commissions get paid at the end of Q1, which is in March, you're not going to be really technically able to reflect that, because the commissions were earned in January and February. But if there was work that was being done in March and you're paying people their commissions in April, then that can be a part of the calculation. So things that cannot be part of the calculation are things like severance, dividends, stock options, and the use of your commercial vehicle. So that does not qualify. The other thing, and I mentioned this earlier, is that there are staff who did not receive remuneration for 14 days during the claim period. And so now they don't qualify. And I will tell you this, the trick to this is that the goal for the government is to get your staff members back on payroll. So the idea of letting you go backwards is to say, okay, I laid people off on April the 1st, and now I want to bring them back on for May the 1st, instead of bringing them straight back on and asking for the 75%, because they technically may not qualify because of this, requirement of 14 consecutive days within a claim period. You technically bring them back earlier and pay them the 75%. And also qualify for, there's a CPP-EI for people who were they were being paid, but they weren't working. So you get that additional benefit. And so then you now meet the requirement. So you might say, I laid off on April the 1st, but at the, April the 10th, I'm going to bring them back on. So now they only had 10 days of no remuneration, and now they qualify. So you can go backwards on this. And I encourage you guys to do the math and make sure that if you qualify for this, that you are creative in terms of how you leverage this, that it works best for your business as well as for your staff. Remember that you can still qualify for the $1,000 per month wage, and your staff can still be on the CERB program or the CERB program. And so you can claim that 75% on the 1,000. Okay. And then any new hires, some of you guys might be hiring more people. That's great. So anyone who was hired that were non-arm's length, meaning they're not related to you, so don't just bring your brother and sister back on or onto your business. Anyone hired after March the 15th, the calculation is the same as any other staff. Okay, I'm going to pause here for questions because that was a lot of information. Any questions about this program, especially the ones who are like, I'm interested in the SFUs, tell me more. Does this give you guys the clarity?
So Stephanie, it's Dave. Just a quick question. I know somebody's got a seasonal business where normally it's students who finish university and then start working on May 1st. Yeah. This year it'll be delayed for a number of different reasons. So if they all, let's say a group start working on May 1st, others start working June 1st, or sorry, May 15th and then June 1st, does that change their eligibility, or do you just apply based on when they actually start working?
I would apply when they start working, because obviously you're not going to be able to share pre-COVID income. There wasn't any. I think the HR question is going to be, were they actually technically still on payroll if they were seasonal? Because if they weren't on payroll, then they would be considered kind of a new hire, even though they've worked with you guys in the past. So that is a little bit more of an HR play to ensure compliance in that way. But I would, let's say, for example, we just brought on a new recent grad and we just brought him back on. And so, or rather we just hired him. And so I would calculate the 75% from that point that he started working, because there was no history with us before COVID started.
Right. So for a lot of these people, they've worked, every summer. That's what they do. And they were given an ROE so that they were officially laid off sometime in April. So it seems consistent with the spirit of the process that you could claim and bring them back earlier because the business is still impaired on the normal startup date that they would have.
Yeah, correct. And I would also say, Dave, if you have a client or a company that's in that situation, I might even be able to get their a grant to top up the other 25%, because there's a lot of co-op hiring programs and student hiring programs that have relaxed a little bit of their requirements. So let me know who they are, and this is what we do, right? Is we try to maximize the benefits for these companies. So, okay, I don't see anything on the chat bot, so I'm going to keep going. Feel free to ping questions later on. I'm just going to show you really briefly the calculation here. So the key thing to remember is that the 10% remittance, or sorry, the TEWS program has to be deducted from the way that you're claiming this. And so let me just make sure that I've got my little drawing thing. Okay. Just going to choose a different color here. Okay. So you see here in this section, they're asking you to deduct that amount. It's very important that you realize that the claim period for the first term, it crosses over into two different pay terms when you look at remittance. So what that means is the temporary wage subsidy, the temporary emergency wage subsidy program of that 10%, it only starts on March the 18th. But then you can see that the SFU's claim program is March the 15th to the 31st. And then it goes on for the first claim into April, but you haven't actually done your remittance for April yet. So you don't actually know what this amount is. Do you see where there's like a little bit of a weirdness there? So you do need to, because you haven't done your remittance yet, because it's not the end of April, you need to almost pre-forecast it a little bit to ensure that you enter the information in correctly. Okay. The other thing that you should note is if anyone is doing work sharing, and there were some questions about work sharing, it's a double-edged sword on this. I honestly would not look at work sharing for this term, because they bite you. They make sure that you deduct your EI benefit that your staff are doing or that they're getting from the 75%. So you're going to get less money. Okay. But then what I was talking about in terms of bringing your staff on earlier is, look at this. You can claim the employer portion of the CPP and EI amounts for pay without work. So in the example I mentioned earlier, where you laid people off on April the 1st, and you decided, because of this program, I'm going to bring them back on April the 10th, but maybe they're not working. So from April the 10th till now, or until when they officially start actually working hours for you, you would qualify for this. So you can add that back on. And of course, it goes beyond the 75% then, because the benefit is added on to what would otherwise be 75%. So very important that you guys are really clear about the calculation here. Some common questions I'm going to go through, just things that I've heard. We talked about how should we deal with a 14-day non-remuneration. I went through that already. So make sure you bring them back so that you close that gap is the answer. The SERB program, recipients. So once you start paying your staff this, and use the 75% subsidy program, there may be some recipients of SERB that there's now a double dipping scenario. The requirement is those recipients need to be paying back their SERB if they're making more than $1,000 within the month. So that's very important, is that you are able to ensure that they either insure or communicate and have it written. Yes, I understand that because I am receiving more than $1,000, that I am expected to pay the SERB. They're not going to come after the companies. They're going to go after the individuals. So just be careful with that. The 10% that was not claimed, if you guys did not claim your 10%, that was me in the month of March. It is possible to claim it back in a future payroll run. So it is something that is essentially on credit for you, but the forms have not been issued yet. So just sit tight on that. It is to come soon, and we'll have that updated on our COVID-19 page when it's available. Non-arm's length revenues, if you have a parent company and a child company and there's some revenue plate in there, there's some very unique rules. Just make sure you look at the FAQ section, because those rules are really kind of beyond what we're able to talk about in today's webinar. And also to remember that the CEWS program, and really anything that comes into the company by way of a benefit, these are taxable. So on your T2s, when you report your corporate taxes, or your accountant, they might say, well, how much did you get in the CEWS program? This is something that you have to report. So you can't really get away from that. It is money that's coming into your business, even though you're not making money on it. It's not revenues per se. There's no profit on it. It is something that you do have to report. I will also tell you that when you run your T4s at the end of the year, which, again, it's not for a few months, but there will be a section to indicate, how much you paid out for pay based on the CEWS. And so that's all important as well, because your staff members will also have this taxable benefit on their end. And there's some calculations around that. And then again, please remember that to keep your revenue drop calculation consistent, if you choose cash, do cash for all 3 months. If you choose accrual, it's for all 3 months, as well as the months of comparison of revenue. Very important. Best practices are to keep all of this data. You guys do not want to put yourself in a position where 8 months down the road, CRA is like, oh, we have capacity now. Let's go and pick audit companies and figure out if they did it right. And then they come and ask you, how did you calculate your drop? And you're like, oh, I don't know. Or can you show me why you think this person qualifies for this? Can you show me your calculations? Like, oh, I deleted that file. That's not going to work. So make sure you guys keep everything, well documented. Calculate it by month. So the best practice that I would share with you in terms of what I do is I have an Excel file for each month separate. And I label it, this is for March, this is for April, this is for May. I show my calculations on there. So I use the CRA one and I just add an extra, section in there in terms of revenue calculation. And then I screenshot my accounting system, because then it's locked in. This is what my revenues were. And so if they want to see any of that, unless I'm fiddling with my accounting system, it should be consistent. Be careful about non-arm's length revenues or payroll, as well as that overlapping period that I showed you earlier on the slide. Okay, so any questions? I missed a pause there on this common questions. Any questions for the CEWS? Eligibility? Do you guys qualify? Okay, so I'm going to move on a little bit here, just in interest of time as well. I'm going to breeze through these slides very quickly because the interest is probably not super high, but just to know that this program will likely be the next one to change a lot, because there's a lot of slapback on it. Only for mortgage property owners, they can apply for funding that covers 50% for their tenants who have experienced a 70% drop in revenues during COVID or temporarily closed. And so there's a way that this gets offset. There's also some benefits to the tenants that they don't get evicted during this period. And there's also some rules around, the landlord not being able to say, okay, well, let's just do it for these 3 months, but I'm going to raise your rent in the future months to offset this. They're not allowed to do that. The calculation is pretty simple. It is that the landlord has to essentially eat 25% of the gross rent, and then 50% comes from the CECRA in form of a forgivable loan, and the company pays the other 25%. So that's how that works. I will say that the next thing, I'm going to assume there's no questions on the CECRA. If there are, please put them in the chat, but I want to get through a couple of scenarios for you guys. So new company incorporated this year. Some of these considerations that they have, please, take a look at these. It's, I'm assuming that they've raised some funds because obviously they're startups. So they probably have started speaking to investors, maybe even secured about $500,000 plus. But some of the concerns that they're working on, because they're working still, is, how am I going to keep the business going? And so these are the support programs that I would recommend you take a look at. So I'm assuming that because you have payroll in January and February, that you guys would qualify for the wage subsidy program. You would also qualify for the SERB program for the business owners and or even that staff member that is part of the team. The commercial rental, if that's something that is relevant, as well as tax deferrals. And because they've raised at least $500,000, they could tap into this BDC Capital Bridge program. You notice that there are other loan programs that are missing from here, and that's because they didn't meet the revenue requirements for those. I will also mention that there is Futurepreneur. If you are a Futurepreneur client as well, there's a top up of $10K for some of the loans that they've been issuing based on the COVID resources that are available. And something that, a lot of startups should be thinking about is, yes, there's support from the government, and this is a case really for all businesses, but the idea is that you guys are able to stand up and get your business back going without support of the government. That is the goal, right? So how are you going to be able to increase your revenues? Maybe you're taking, a hit on the quotes that you originally gave. Instead of doing a website for 8,000, you do it for 5, or instead of doing an app for 20,000, you'll do it for 15. So we've seen a lot of startups do that. We've seen a lot of startups do a pivot. So maybe they were selling, material, and now they're into selling materials for masks, things like that. And of course, please make sure that you guys are negotiating your costs. This is just general good business practice. You guys are attached to EIRs at VentureLabs who will go through specifically with your companies, kind of what are some ideas of how to ensure that you can further reduce costs. So please leverage that resource for sure. Okay, so before I go on to the next scenario, any questions on startups? No? Some of you guys feel like you're in this boat, or you're in this boat. So you guys are owners only. You don't have any employees. You read some reduced work, but you haven't been compensated since March of 15th. And so these are some of the considerations that you have. And this is what I have for you. So I don't have obviously the CEWS program or the TEWS program because you guys are not on payroll, but you can, because maybe you guys were on dividends for last year, you guys could now qualify for the CEBA program. So they do count dividends as a part of, not the CEBA program, for the CURB program. So they do count dividends now as a part of your payroll or income, I should say, for the last year. And so that's why, as business owners, if you were taking dividends, you can qualify for the SERB. Of course, if the company has some money, you can top up to 1,000 there and still keep that benefit. The tax deferrals, leverage that. BDC and EDC do allow sole props with at least 12 months, and there's some profitability with the company to be able to apply for this successfully as well. The rates are pretty good, so I would check into that as an option. And I'm assuming that there was, maybe there was some form of wages that were paid out. Maybe right now there's only 2 people, but maybe last year you guys brought on a part-time assistant or something. So it's possible that you guys also qualify for the CEBA program if you had some payroll. Maybe even a student over the summer was helping you. Think about that as your wages of over 4 months. If you had a couple of co-op students, you guys qualify, likely will qualify for that in that way. Okay, so it's not your payroll necessarily, but that's what that is. Okay, so I'm gonna go to questions before I go into this.
Dave, you just go back one. We had a question that fits this slide here. So Brian asked if it's a pre-revenue startup. Am I correct, really, though, that a lot of pre-revenue startups don't have BDC funding and other items? So it really is more, what are the individual programs available? So if you're a 2-person startup that's in its really early stages, it's almost as if you should go after programs that fit the 2 owners as individuals, because as of right now, there doesn't appear to be a lot available for a company like that.
Yes. I apologize. I mean, I was going on, I'm going to draw this here, but they were established for a while, so there was some revenues there already. But yes, in the case, Brian, of your question of pre-revenues, that is a challenge. I'm going to throw something out at you guys. There's a lot of talk on this regional development funding, which I did not have on the slides, but it apparently is run through WD, Western Diversification, and you can just Google it. It is supposed to be support for those companies that don't qualify for some of these initiatives because they are pre-revenue, or maybe they were business owners who were not paying themselves and they don't qualify for much. I would look into that. I was on the call this morning with the government, and they were saying that those programs aren't fully set up yet. Also, the lean on WD is often community futures or organizations that are kind of in more rural areas. And I don't want to say that you guys aren't, maybe some companies have set up in their, I don't know, Prince George or Fernie or something. And so you guys may qualify in that way if your business address is there. But that's one of the reasons why I didn't put it on there. I would look into it though, because honestly, beyond the IAP program through IRAP, there's not much for pre-revenue startup. Like the CERB program is the best that you can kind of do to at least pay your owners and your staff so long as they qualify. And then the tax deferrals, but if you're not making very much income, that's a little bit of a challenge. The BDC for sure, if you don't have any revenues to prove, then they're not going to play because they need to ensure repayability as an option. And then, of course, the CEBA program, if you're pre-revenue and you didn't have any payroll last year, that's going to be an issue. So I would look into the regional development funding, but also note, and I'm really clear about it, as of May the 1st, the details of these programs have not been launched officially yet. And whether or not it covers more urban centers like Vancouver is still to be determined, or urban centers like the greater Vancouver area is how they would count it. So, but I would reach out, and I would, there's no harm in asking, because if you don't ask, the answer is always no. Okay. Any other questions, Dave, that you've gotten? Okay, I'm going to assume no. Okay, so I think that the next thing to talk about is what to expect next, because it's great that you see government funding, it's relatively high value. I was speaking to the EIRs yesterday about this. The Liberal government is edging on $150 billion being used over the last 6 weeks, 8 weeks maybe, to kind of ensure COVID resources are available to businesses and individuals. But that's got to stop, right? Because that amount of deficit is not something that our country is anywhere close to used to. I saw something on the news yesterday that the overall deficit for this year is going to be $250 billion, which has been the highest in history. So you're going to see that the government programs right now, they're high value, and they're going to eventually be moving to either a zero value or a reduced value. So the question came up with Dave yesterday, do you think that the 75% wage subsidy will be continued? There's going to be 2-3 factors in this. One is, how long is the country still going to be closed for? And does that impact majority of the businesses? And the thing that's also tricky about this is every province is launching at a different time when they're going to be coming back. So do you exclude those ones that have already, they're all good and happy and everyone's back at work, or do you still include them? And these are federal programs, so there's got to be a level of fairness there. There's also a consideration of, is there still money in the budget? Right now for the CEWS program, just as an example, there's $73 billion earmarked for it over the course of 3 months. Maybe by the end of 2 months, they realize that the spend is only $48 billion. So now they've got, another 25 or so that's sitting there, that's available. And so minus the last month of support, and with a little bit of some buffer there for those who are late filers, there may be an opportunity to then extend the programs as a result. We're also going to hear a lot more terminology from relief support to recovery support. So you're also going to see that things are going to be called, less on the emergency funds. The E in the acronym for every program is emergency, because that's what it is right now, to more incentives. And Granted was born out of the economic downturn in 2008. So I started the company in 2010, and that's when the government was able to start rolling out some of these, hey, hire a youth, or send your staff to training, or get upskilling here, or look at exports, and so all these programs that were available were to honestly increase taxes, because the more people who are employed, the more people who pay taxes. The more people who pay taxes will go to all this debt that we're incurring in the government level. So you're going to see probably some incentives that happen. And, either you keep up to date on your own on these programs, or you work with companies like us, or you do your own research and you do a combination of, get the information in one way. Innovation Canada has a website. We have Get Granted that notifies you when there are changes to these programs. And so it's really important that you guys keep your eyes out. I would do, during the recovery, at least once a week, do a little bit of research. I'm not saying that you have to sit there and do 10 hours of research, but it is important that you do a little bit of research every week, because these programs will slowly launch, and you might get 3 weeks of nothing and then 1 week of like 3 programs. So especially if you're hiring, especially if you're skilling up, those are all things that we deal with a lot. And so please tap into us as a resource for that as well. And we're also part of VentureLabs, right? So I'm going to go with, just for timing purposes to get more questions out. This is the support that we're offering. The COVID-19 page is up there. If you guys want the notifications, there's that. We also have a special $250 session and, advisory session that we are running with companies at VentureLabs. And this is only for you guys, as well as those at Venture Connection. So if you guys are like, listen, Steph, this is all great, but all this information is like foreign language to me. I kind of get it. I kind of don't get it. Is this really a no? What do we do moving forward? We're hiring a person, or we're looking at sending people to training so that we can pivot. These are all things that we deal with regularly. We can sit down and have a session together to ensure that you understand what your path needs to be. So that's where I'm going to end the presentation. Okay, so please, any questions? Please use this time and share things. If you have questions, maybe other people have the same question as well. Oh, and we've got a poll.
Yep. So we have a poll, and there are some questions online as well. So we'll go into the questions in just a moment. Just give everybody a minute or two to answer the poll if they find that that's something they'd like to do. So one of the questions we have online in the Q&A section is from Gita, and he's asking, what if your business is a side hustle and your primary income is from your day job, which hasn't been affected? Can I still apply for losses to my business?
What if your business is a side hustle? Sorry, should I be looking at the Q&A section here? Oh, sorry.
Yeah, if you look in the chat function Q&A, you can read the questions.
Your primary income is from your day job, which hasn't been affected. Can you apply for losses to your business? Yeah. Your losses are based on your business losses, right? So they don't care at this point. There's no separation in terms of, do you qualify for this or that? I think the one thing you need to be careful of is, the CERB program, because you might feel as a business owner you qualify because your business has been reduced. But what they will look at, because this is an individual program, is that you already have income. So that is the one program I would be careful of, ensuring that you do meet the requirements, because they don't really care. What I will say is, if you're making $1,000 off, maybe one of your staff are making $1,000 off one company and they're making $1,000 off another company, they don't qualify for CERB, right? Because you can only max per month make 1,000. So it's the onus of the individual. And so, Guda, for your question, which is a great question, I would say please make sure that you look at that for programs that overlap the individual versus a business. But as mentioned, the CERB program or the CERB program is not a business program in that way. Of course, businesses are using it to keep their staff going and paid and able to leverage, but it is basic individual benefits that will go back to the individual. It doesn't get run through the business. So no issue to be able to leverage the other programs for your business, in short.
So just two things I'll add now. Looking at the poll, the two areas that are of most interest are CEWS and CERB. So the two of them are sort of equally interested. In the chat area, we had a question earlier from Kathy about if there's an equivalent in Eastern Canada. And her business is in Nova Scotia, and looking it up, I think the Atlantic Canada Opportunities Agency is kind of the equivalent of WD, or Western Diversification. So that, I think, for Kathy would be a good place to start.
Absolutely. Yes, there's the Atlantic, there's an Eastern, I believe, and then there's also for the prairies are covered under Western. So it's cut up in a variety of different ways. If you just Google regional development and COVID, you could probably find that information as well.
Are there any other questions from the audience? Let's see what else we have. Q&A, or Floyd, if there's anything that comes to mind for you, please chime in if you've got a question. Two things that impress me, just while we're seeing if anybody else has something. One of them is that this is very much a work in progress with the benefit programs or the subsidy programs. Am I correct that you would anticipate significant changes kind of every 2 weeks or so? Is that a good way to look at it?
I would say that the CEW, anything that's launched and people are really leveraging right now, it's going to be hard for them to make major changes to. I think the one program that has a little bit more opportunity for fluctuation at this point in time is the CECRA, which is that rent subsidy, because the uptake on that has just been not desirable in accordance to a lot of businesses. So it's hard to get landlords to adapt onto that one. I think things like, honestly, I'm going to also give the perspective on government, because my mom used to work at CRA and I know kind of what goes into systems and processes there. The fact that, the CEWS program, people are already applying for it. We applied on Monday for it because that was when the portal opened. And the fact that they had to build this portal from the ground up, from that 10% announcement in mid-March, to then adding up the 75%, which is why this calculation thing is such a nightmare, because they essentially overlap one technology over another, or the algorithms are overlapped this way. So it sucks the way that they did it, in my perspective. But they're not able to change it now, right? Their hands are tied because so much development has gone in already, and you guys are all developers. If you have the wrong platform to start off with, then you got to really start all over again. They don't have time for that right now. They need to get the money out to businesses. So, but in terms of, tweaks, things like the $1,000 for the CERB program, that was helpful. Moving forward, they might say, okay, now you can make 1,500 and still qualify. Oh, now you can make 2,000 and still qualify. They might do stuff like that if they have money in the bucket. That's the other piece, Dave, is if they still have money in the bucket, right?
Mm-hmm. It's a follow-on question from Gita, if you want to have a quick one.
Yeah, here we go. Oh, good. We got some. Please follow up. Each founder in our company applies for CERB, or is it one application? It is per person, Guda. So, and it is important that each person does their own application, because they have to attest to why they qualify for the CERB program. It isn't just people, and maybe this is something that I didn't spend very much time on, but I'll make sure that this gets covered. It's not for staff members who say, I prefer to stay at home. can you just put me on CERB? That is not okay in accordance to the rules. This is involuntarily the company had to lay you off or had to reduce your hours or had to, give you less pay. Maybe there was some negotiation for less pay. So it is I must do this. There are some exceptions to that. So if you're taking care of your own kids at home and you can't get daycare and all that, like that is obviously important. Maybe you're taking care of someone who is unwell and impacted by COVID, or you are mandated to quarantine because maybe you were at that poultry factory and so now you have to quarantine. Things like that, you could still qualify for the CERB program, but it is not an optional thing, and nor should you communicate that to your staff that it is, oh, well, do you want CERB or do you want to work? Like, don't ask questions like that. You're going to run into issues with CRA later on. Okay. Okay. So, was there another question?
I think we have a quick question from, I think Floyd may have a question about CEWS.
Okay. I don't see Floyd's question. Floyd.
Okay.
I'm having issues with my mic.
Okay. What's up?
Can you hear me or not?
I can.
Okay, thank God. Yeah, this was freaking out. All right, I have a question regarding the 75% wage subsidy. There's one company in particular that I'm helping with, and due to lots of circumstances, they had their best month by far ever in their history in March. However, the COVID hit was significantly delayed, and April looks dreadful. And no matter which way you look at it, March was amazing, cash accrual, really, but April wasn't. Can they still do something here that's out of luck?
Not for March. Not for March.
But they can apply for April.
Absolutely. They can apply for April and May. We will see that there's a little bit of this delay in terms of, March was amazing and then all of a sudden like everything's gone. And so you might not reflect it. So the opportunity is to access it for the 2 future months.
Okay, thanks.
Okay. Good question. Dave, I'm going to throw it back to you.
There's a couple other questions in the chat area that we've answered. The last one was one from Lynn about the rent subsidy. It's something that VentureLabs is working on.
Okay.
I don't see any other questions. I'll make one comment. I know I've applied in the past for Canada Summer Jobs, and they are asking people who applied this year by the February 28th deadline to confirm how many grants they may use. Mm-hmm. And as they're doing that, and they actually sent a questionnaire out earlier this week, I would anticipate that program will be reopened and there will be an opportunity for a company to apply to Canada Summer Jobs again. And it will then extend through the rest of 2020 into early February of 2021.
Okay. I'm not sure that it would, and for a couple of reasons. One is it takes so long for them to review these applications. It's been havoc. Like for those who, and Dave, you have this experience as well, because you applied in future years. We applied for one as well. They essentially, even though they have the applications in January and February, they don't give you a response until beginning of May, which is to me horrendous. Like I don't understand why they need to take that long to go through that situation. Mm-hmm. The other thing is that they've bumped up the budget, where in the past they only covered 50% of minimum wage, and now they're bumping it up. And I know there's been budget dollars attached to it, but I don't know how they'd be able to run it quickly because of the way the system that they have is really kind of challenging. My recommendation is all of you guys in VentureLabs qualify for co-op students. Go do that, right? Like the summer students thing. Yes, if you guys are a restaurant, or if you guys are a maybe at the yacht club, or maybe you guys are in childcare and you guys need, then there's some play there. But man, these co-op programs top up. There's some of them are like, we'll give you 70% up front. Like, don't wait for this thing to come through. My recommendation: get on get on Innovate BC, get on the WIL programs, get on the SWPP programs, get on those programs so that you guys can also ensure that there is a summer of work. Because by the time they roll these things out, and Dave, you can probably attest this as well. Let's say they say we're going to relaunch it. That would be, now we're already into May. So we're really looking at June or onwards. And then these kids are going to have maybe 8 weeks of placement by the time you do your recruitment, and then the summer's done. But if you act now, and we can help you with it, with some of these co-op programs, you can access funding now, hire your student in a couple of weeks and get them started by mid-May. So now you've got 6 weeks plus, and you've got the double dip on that 75% if there's a stackable capability between co-op programs and the 75% wage subsidy. So you got this person for free for about a month's time. So though, you know, I think differently in this way because I know how slow the government is. Yeah, there's word that maybe it would open up, but I question, the thing that I do question, I should say maybe more clearly, is whether or not they'll be able to roll it out in time for summer. And would it then creep into the fall? We are seeing that deadlines allow for up to hires to, I think, February of 2021 or something like that. But then most kids go to school in the fall and then they take Jan to, you know, April and then as a co-op, and then they take the summer as a secondary co-op. So the timing of that may or may not work.
Yeah.
I think the fact that they threw this student program out there as well is also may deter some students from actually going out and getting more work, because with the student benefit that's out, you know, you can make a good amount of money staying at home. So that might be another kind of wrench in things.
Yeah. We have one more final question in Q&A from Emily. If you could have a quick look there. It's about CERB.
According to the BC labor laws, how would you reduce an employee down to $1,000 a month and still stay compliant? Wages can only be reduced by a reasonable amount, and work hours cannot be reduced by more than 49%, or would be considered a constructive dismissal. Would you need to lay off first and then bring them back? Oh, okay. I'm going to actually defer a little bit to employment law on this, unfortunately. I think that you have to, okay, I will say this. You have to ensure that whatever it is that you're doing is obviously compliant to BC labor laws or whatever province that you're in, right? So I would think that the reduction of down to 1,000 would mean that you would have like a ROE or maybe some documentation that says we aren't able to give you this. The CERB program works in conjunction with the EI program, where they roll you into the CERB program. Unfortunately, there's no choice at this point in time. So yeah, you could be laid off in that way. And so it does count towards that, Emily, which you're absolutely correct. But then you can still work a component of up to $1,000 in payroll, which isn't an issue with CERB, and it may become an issue later on with EI, because EI then has a separate component where it says, well, if you made, you know, money outside of your EI claim, then we deduct a certain component. Right now, I'm going to say I can give you a couple of names of HR people who probably could answer that question way better. But the key is, and the lesson learned for all of you guys, is make sure you document all these changes with your staff to ensure that you have that compliance, and also they have the understanding of what's going on. So I agree with you, Emily. I think it does sound like it would be some form of a dismissal, you know, in that way, based on, you know, the correct information that's been put up here, assuming it's correct. But I would definitely talk to an HR person with regards to that. Okay. So great question, though. Thank you for that. And we've got something else in the chat. Oh, that's that. Okay, so I think that's everything. And I apologize for going over time, but I hope that you guys found this presentation helpful.
I think I'd really like to thank Stephanie for joining us today. It's very good of her. Do you have another slide farther on with your contact info for everybody?
You know what, I'm going to go and just put this up for now. And what you can obviously see on there is there'll be a contact us form that people can fill out. The cool thing about our contact us form is that we also have a grant calculator on there. So it will tell you, based on your company's profile, how much approximately in grant funding you could get beyond the COVID stuff, of course, over the next 12 months based on how you enter it. So I would encourage you guys to use that. It's free. And then at the end of it, it will give you next steps, either to connect with us or book a call or take a look at Get Granted. So it'll kind of drive in that way. Someone in the chat was asking for the COVID resource page. That's what it is. Super simple. Granted.ca/COVID-19. So that page is one that we are going to constantly be updating and ensuring that the information is available.
All right, good. Well, thank you very much. I think we've gone through all of the questions. Thanks to Stephanie once again. If VentureLabs will run other webinars sometime next week and beyond that. One of them next week is a joint venture with HubSpot, a little bit about internet marketing. So we will also post the recording of this so that if you want to listen to it again, it is available. And thank you very much for joining us. I really appreciate it. We're going to sign off now. We'll talk to you later. Thank you very much.
Thank you. Yep, welcome. Bye.